chief U.S. economist at JPMorgan, Michael Feroli. He is a Bloomberg best, one of the most accurate forecasters around on home sales in particular. Michael, we just heard Michael McKee, our economics editor, give us a little bit more analysis of the data and, more or less in line to slightly worse than consensus for these figures. Where do you see housing right now as fitting in to the U.S. economy?
Well, housing, as Michael said, has been very depressed. It hasn't shown any signs of life lately. And I think it's hard to see housing pick up unless you start to see a more durable improvement in the labor market. So clearly low interest rates have not been enough in themselves to get housing moving. And I think the hit to sentiment probably doesn't help either. So until we get the labor market moving, it's hard to see housing really picking up.
Michael McKee just went over some of the ideas that are being considered in Washington. Obviously, this is a big stumbling block for the U.S. economy right now. Do any of those interest you? Do any of those make sense to you?
I mean, they all make sense to some degree, but I think it's a lot easier said than done. I mean, we've tried a lot of programs here, HARP, HAMP. A lot of those already allow underwater borrowers to refinance, and they haven't been very successful so far. So it's hard to think that the regulators have left any, or the housing authorities have left any low-hanging fruit here in terms of getting the housing market moving forward. So, it'd be nice to hope that there's some magic bullet here to get the housing market moving forward, but I think the problem is you just have too many houses and not enough home buyers.
Michael, we saw the Fed, Ben Bernanke, step in last week with Operation Twist, and there was actually even more support for mortgage products. It sounds like you're not too optimistic that that's going to have an effect either on the housing market or on debt.
Well, at the margin, it should help a little bit, but so I think the direction is correct, but the magnitude is probably going to be pretty small. So, we think it was a helpful step. It's just not going to be in and of itself enough, I think, to get the housing market really moving forward.
So basically a drop in the bucket. Michael, what else are you watching as you try to evaluate just where the U.S. economy stands? I mean, this week we have durable goods orders, we have initial jobless claims. Are these the two data points that you're the most focused on?
I think for this week, definitely. In terms of the durables report, capital equipment spending has been one of the few real bright spots in the economy over the past 2 years. So if there is any weakening there, then I think that spells trouble for the economy. And secondly, initial jobless claims, as you point out, those have been drifting a little bit higher lately, but they haven't been spiking higher as you might expect if we were slipping into recession. So that's been comforting, but we want to obviously watch that every week.
If you had to put the odds of recession, of the U.S. economy going into recession, Michael, what would they be?
Geez, I think over the next 12 months, it'd have to be something around 40%. Certainly the data right now have not been too comforting. The European situation is also a little bit worrying. And then we probably are facing some pretty significant fiscal tightening early next year. So, if we manage to get by all three of those bullets without slipping into recession, by this time next year, I'd consider that a success.
And Michael, just before we let you go, I'm just curious, is this 40% chance that you see now, is that greater than what you thought about a month ago?
It's about the same. A month ago, the data had already started to turn quite a bit weaker. Financial markets had already caught on to the fact that Europe is a tricky situation. So roughly unchanged over the last month, I would say.
All right, Michael, thanks so much. Michael Feroli joining us there. He is the chief U.S. economist with JPMorgan.